And gentlemen of the crypto space, we're live on a Friday, March 7th at 11:32 a.m. Ladies and gentlemen, we're finally seeing the change of the flows. And that is why for the last years we've been talking about what the flows mean, and that specifically means the flow of capital into one country versus out of one country. So that's the overall system. Now, from my reductionist perspective and how I understand the world, I very much like to think of currency units, which kind of makes sense, and where they're going. So if you know where they're going, for instance, if there's a pool of capital in the United States, where's it going? It's going to be invested, businesses, manufacturing, like venture capital, where an existing company needs to raise capital to do something, or they just go to public markets because that is the easiest way to literally buy some shit to engage in some sort of financial activity. Now, this is the same for every country around the planet. So if there's flows of capital into Britain and there's an increase in the amount of capital over time, it's going to spread its way throughout the economy, not only into private capital allocations, but also public markets. Folks need to understand that simplicity makes things very comfortable for the captain. So, what does this mean? Actually, let's start with this. Bravo's research is quite decent. I'll put this link in here. I don't retweet it because it's a little outside the scope of things that I discuss. But this is like a traditional financial inspection, and he talks about S&P. I don't think he mentioned the Nasdaq, but that the got to remember my scope is I don't give a shit about the S&P. I don't care. I don't care about Nasdaq. I care about the companies. We consume products and services from all these companies, and that's meaningful from a societal perspective. But I don't give a shit about them from a boomer meme coin standpoint. This instrument on the stock market is not being used for a capital raise; it's just being speculated on, just as if they were meme coins. Price goes up, price goes down. Nothing else fucking matters. They don't offer you anything. They don't give you anything. So that's conclusively and just that's my statement for my opinion of traditional financial markets. Um, Therefore, it's exactly why our entire conversation revolves around crypto markets, because that's where the opportunity is, in my opinion, especially when from capital outflow starts from the United States to other countries. And that's exactly what we're seeing in the data. So aside from a downturn, which is unexpected, as Bravos talks about, which makes sense. Growth scare. He's talking about the last couple of times since the 90s where this type of environment occurred, where bond yields, 10-year yields flat. Meanwhile, 10-year yields are absolutely exploding across the European continent. So I tend to agree with Bravos. It makes sense from an equities market. Maybe it's not much of a drawdown. Maybe we see um, a continuation to the upside, as is suggested in the video. But then I say I don't care. So what I want to understand is how does that translate to the crypto space? So historically, there's a correlation with equity markets and crypto. I've always asserted, or at least most recently, that is just not anecdotal, but it's not causal. It's a knock-on effect. It's sentiment driven. Yeah, equity markets are rallying. Okay, then everyone in the general public's like, where the hell else could I throw some money? And crypto markets are a much faster market, therefore they throw money at the crypto market, much less as compared to equities. But that's the whole point. Much less still translates to bigger deltas in price action because it's such a microscopic pink sheet market, this crypto space. So I assert that was always a loosely coupled relationship. The crypto markets are a market. United States stock market, S&P, Nasdaq are markets, and they were always loosely coupled. It's not like the rise in the stock market causes a rise in crypto markets. That makes no sense. but clearly sentiment does carry suit. All right, so my general expectation is, considering what we're seeing in global economic flows, is fine. S&P levels out, according to what Bravos is clarifying, um, and doesn't experience the insanity that we saw in 22. I mean, between 20 and 22, just a broad rally in the crypto market, Mag 7 forming. Basically, the entire stock market is held up by such few companies. Um, and that's also a result of manipulation. And everyone looks at the stock market in terms of the S&P, which is literally an ETF. It's a single ETF, and that's the same thing with QQQ. It's a single ETF. So the balance of the components of the ETF have skewed towards Mag 7, which is why you get the charts that you do for Nasdaq and the S&P. It's not representative of the overall market. So for that, you look at like the Wilshire 5000 and the Russell 2000. In which case it looks like shit. So generally, my opinion of where we head from here is weakness until things stabilize, as Bravos is talking about, and then general leveling off, maybe a shitload of horizontal chop. Hell, look what we experienced for Bitcoin in 2024. Months and months of horizontal chop. Where's equities having horizontal chop? Great. It's due, it's deserved. What's the point of it going up? Where's the growth? And that's literally what, you know, f- uh, the Fed's GDP estimates say, with minus whatever, 2 and change%. The growth is coming down and the fiscal isn't coming back. Besant's saying it's not coming back. It's changing. His policy is antithetical to his predecessor, Yellen. And that's the entire presentation by the administration. We're not going to get a fucking disgusting ass fiscal print. So Besant does say he wants private sector spending instead of public sector spending. So this is kind of consistent with the keto economics that I've talked about. The return to something that's healthy, um, and that's exactly what's healthy for an economy is private sector spending instead of public. So what does this mean for what kind of market we could experience for crypto? We could experience a very, very different market than what we're historically used to. Um, in particularly in regard to the significant change in capital flows, very significant secular trend changes, and to see stuff like that, you go to the DXY and you go out to a 6 month, and obviously you got the noisiness of my lines that are for shorter term time frames on the weekly, but we are stopped out, which looks like at the 107 line. And now we could potentially be in for 10, 15 years of lower highs and lower lows on the dollar. And what does that mean? Aside from the flows, what that means when it goes lower, the lower high in the secular trend indicates or would indicate that the structure of the world is different. And I've often talked about when these flows reverse, there's a different behavior in society. It has a different feel, it has a different smell. It's a different texture to the way people are because people's behavior is a manifestation of the economic reality. And that economic reality could potentially be literally changing for the first time in 14 years. Well, it's 16 years now, but it topped out in 2022. The dollar has been in a bull market since 2008. Most young adults, especially in their 20s, don't remember what it was like between 2000 and 2008, that 7 year period. It was a different world. Each leg of this, down versus up, is a different world, particularly because of the flows, and the flows carry over into the sentiment and the texture that I just described. So, what does the flows look like in this different world? The flows of lower highs and lower lows from a dollar valuation perspective suggest capital outflow from the United States with increasing valuations of foreign currency. If foreign currency is more valuable compared to the dollar cyclically over the course of years, that you could say distorts, but it's not. It um, transforms what we currently hold as normal behaviors, and it transforms them into very different behavioral tendencies. All of a sudden, instead of working in Britain and earning pounds, you and buying dollars because dollars just going up, up, and up, and investing in U.S. equities because they're going up, up, and up. You're like, the pound's going up in value and the dollar's coming down. So now that capital gets retained outside of the U.S. It doesn't get transferred to the U.S., invested in the U.S. And now what happens? Now these types of investments, especially very liquid public markets, outside of the US get monetized and then they start going up as there's more capital that's retained outside of the US. So what have I said about um, the, the the movement of capital? Trends continue until capitulation, and then they reverse, and capital flows from underperformance to outperformance. So this is kind of the not the commodity super cycle, but this is the emerging market cycle where, and that's exactly what the dollar reflects. It's the emerging market cycle. So as stuff starts to appreciate outside the US, capital flows outside the US, and especially as the dollar depreciates, currency is more valuable outside the US, which begets more appreciation of these liquid assets outside of the US, and that just draws capital outside of the US. That's where the investment landscape becomes. So that's maybe a good part of what this different world that we're going to experience is, where the US isn't the most interesting place to invest. And all of a sudden, all these new investors and with their brokerage accounts investing in micro caps and meme stocks, like, they call their broker and they're like, I need an international feature enabled on my account so I can invest in European markets or Asian markets, because that's where the excitement is heading. So what does that mean for crypto? You all know damn well what that means for crypto. Hmm. Crypto is not a US market. Period. Full stop. Mic drop. It's just not a US market. So that literally means everything that I just said is applicable to crypto. The irony, the greatest irony probably of the crypto space is it benefits from insanity in US markets where the dollar's rallying, which is exactly what we saw. I mean, let me go into the monthly. Let's zoom in a little bit. You got to go back, and this is why this story is 14 years, 16 years in the making. That's exactly what we saw. We just saw crypto rally in 2016, 2017, 2020, and 2021 in a backdrop of a dollar bullish environment. The dollar has been rallying for 14 years. And therefore, crypto being an international emerging market of emerging markets, accessible to all markets, crypto was rallying because it was this pool of capital that was sloshing around, excited for investment opportunity, and they were investing in dollar denominated things, which bled over into the crypto market. But now that same thing is the case outside of the US. Exactly the same thing. So all the crypto market needs to rally. So okay, check this change of thought. So what people have talked about the historic relationship between US equities and crypto, that's the case for any bull market in any country around the world. Oh, stock market's rallying, people say, because everyone thinks very US centric. Oh, American US stock market's rallying. Oh, crypto's rallying, and crypto's faster than the stock market. All right, great. British stock market's rallying. Oh, crypto's rallying. Oh, that makes sense because it's a market directly accessible to Britain. And it's the same thing for all European countries. If there's any exuberance in any market, Someone's always going to be looking for outperformance, and they're going to be looking to markets that are accessible to them. So it's the case that uh, pick a country. If you're in Spain, you're looking for stocks, maybe European, maybe British, maybe some local market, and then you're like, what's doing better? Oh, crypto, because it's accessible to all markets. An emerging market of emerging markets, accessible to all markets, but of no market. So I expect to see significant correlation between the crypto market and pick your stock market around the world. You just need that bullish market to ignite that exuberance that people are well too aware of, and it carries right over into crypto markets. So then the mental calculus is what is the precursor to those types of conditions, and that's capital availability and being basically the easiness of money, as they talk about in financial terms, how easy credit is to acquire, and that has been coming down, and that comes down like a freaking hammer when the dollar rolls over. That absolutely collapses when the dollar rolls over. That's why we've been talking about the dollar for all these years. There is so much more currency on this planet than the dollar. And when the dollar comes down, that tsunami of currency that is printable by foreign nations gets more valuable over time, cyclically, and they can print it. And these crypto assets are not, they're denominated in dollars but they're not only available in dollars. That is exactly what the original expression of LPs were. So that's why foreign exchange is really has expressed itself very well in crypto markets. So I suspect in that regard, we'll start to see LPs be not just dollar denominated, like for instance, three pool or whatever. It's all Tether USDC. All right, great. As foreign currencies appreciating, you're going to start to want to have other denominations uh, pooled with Ethereum and Bitcoin to facilitate transactions in a desired pair. Because people won't want to exit that denomination. They won't want to exit. I don't know about the euro. That's a whole complicated geopolitical conversation. But Switzerland, oh my God, which happens to have a stablecoin. Meaning to talk with them off the top of my head. What was? Oh, yeah, Frankencoin, Swiss franc. So there you go. So maybe that's a relatively stable currency. Just happens to be in a horrible situation, nestled between Europe and Asia, but historically it's done very well. So that might be a go-to currency, but that's the point. The point is it could be so many currencies. How many currencies other than the dollar are there? The dollar is only one currency. Everything else is other currencies. And in a cyclical dollar depreciative environment, the not dollar is appreciating. All right, so that was exciting. That was a mouthful. So that really ties together what we've been waiting for quite some time, and it's not just top in like this year 25. We've been waiting for this since 22, but the story that I'm really trying to express is we've been waiting for this for this. This is what we've been waiting for that to be invalidated, and that goes back to 2015. So we're talking 10 years, ladies and gentlemen, for all you youngsters out there in your 20s. This is a story that I'm telling you is 10 years in the making. When this upward trend, when this upward trend decides to start going down. I mean, look, for crying out loud, look at 1995 to 2008. Up, down, up, down. And now, up, we just got done with up. down. I mean, one, it just makes sense. Two, it's about time considering the geopolitical situation of frickin' everything. And the thing to understand is what the lines I just drew mean for these markets. It means everything. That's why it's so exciting for pretty much where we are. Rates are going to come down in the US and we'll see a very different environment for the general public. Things will get a little bit easier, hopefully. It's definitely financially easier with regard to credit availability. That's the whole point. Rates coming down. There'll be some complicated interactions with regard to appreciating foreign currency. Things will be more expensive for imports, not for things produced domestically in the United States. And that's literally everything that the administration is saying they want to do. That's what tariffs do. Tariffs make imports more expensive. If imports are more expensive, don't import, make it here. And then guess what? Then you export. So in order to achieve that, you throw on tariffs, which spurs the dollar depreciative cycle, and then you start to manufacture domestically, you start to export, and you change the structure of the system. So everything goes back to the fact that literally the entire structure of the system is changing. And I guess maybe it took administration policy of a sitting administration. That's a quite a reasonable statement, but it's also due. And it's overextended in many regards, at least from a long-term dollar chart perspective. I had some old stuff that I drew a while ago, but let's see if I can crank it out real quick. 5,122 days. That happened to be 4,000 bottom to bottom, and then bottom, because then there's your 4,000 from last cycle. But if you just draw some symmetry, like if the pace it comes down is comparable to the pace it comes up, let's draw somewhat of a line, I guess. Let's see. Let's draw it to the top. We're going to go like this. And then we could just bring it down to the trend line because that's a decent trend line of lower lows. This is much longer, 7,484 days. If symmetry holds and charts have a very ironic way of presenting themselves symmetrically, 7,000 days. That's a that's another 10 years. 4,700, no, 3,000, almost 3,000 days. So that's 8 years. I don't know, give or take, let's say. So it's overdue. We are overdue for the structure of the system to revert back to an exporting nation for the United States instead of whatever the hell we built. This debauchery of globalization, this import dependent country we've had for the vast majority of our lives, and for younger people, the entirety of your lives. Wild, wild data. And where are we on the dollar today? And that's the big news that really started Wednesday. I couldn't stream on Wednesday, but we were rocketing towards the weekly 100. And I'm like, oh, and then it held there for a second. It held there overnight. And I was like, are you going to punch? Are you going to punch? And now we're 7 hours from a candle body close below the 100 on the weekly. Do you know what these lines are? These lines were extremely positive environments for crypto back in 2024. When you get below these moving averages, it takes time. This is a forward looking indicator in many regards because sentiment also plays a part. People have to become comfortable with deploying capital. But once you start to get below these lines, you're invalidating old sentiment and you're starting to reform new sentiment. And this is where bullish market conditions start to emerge. Start the process, because then that process gets viral. I get bullish, my friend gets bullish, 10 other people get bullish, which causes 100, which causes 1,000 people, and then before you know it, you're in a freaking bull market. So my image the other night is probably best expresses my sentiment. 102, 102. Man, you get to 102. You breach this 200 SMA to the downside. That was the prime time for bullish market conditions back in October of 2017 and in July of 2020 into the end of the year. July, August, September, if I remember correctly, things slowed down in November, and then December, January, we had a correction. And then January of 21 was very bullish. And that's where we got our double top. That this is exactly why we got our double top in Bitcoin last cycle. Below the 200 on the weekly should be much more favorable conditions. So that's a hypothesis. The whole point of what we do in looking at technical data is to present the hypothesis, and clearly the market is going to test our hypothesis. So my hypothesis is 102. 102. You get below 102, and history says things start to get interesting. And I look forward to seeing that play out to test my hypothesis. 7 hours for the weekly close below the 100, and then obviously it's going to be much more of a push to get below the 200 because we were at the 200. If you all remember September of 2024, you remember what it was like during summer heading into fall. September of 2024, when we were approaching this 200, we were like, it's going to punch through, and we're just going to have a ridiculous bull market. It didn't punch through. So now we get to watch it try and punch through again. And then we got to deal with levels. So you punch through and fine, you get stopped out of like 100, but this thing starts to fall down. And then, then you're looking at different levels. That looks like a decent level. 98 looks like a decent level. But you start to race down, and market conditions can be very interesting. That's my position. That's what gives me my confidence and my comfort. Dollar down plays into the entire conversation that I discussed when I started the stream. The dollar down makes for the conditions that we want to see for crypto markets to get absolutely disgusting. I hope that all makes sense. That was that wasn't very short. That was a lot. Fugu, good morning, Cap. Good to see you. Always a pleasure. Athletic concept. Great to see you, Cap. Yes, yes. Mr. Barata, good morning, Cap. My best salute. Cloud Llama, good morning. Peter, good morning. Arrow, Sir Joe. Snokes in the house. What do we expect from today? Well, I mean, obviously, my introduction tells us a very high time frame perspective of what's going on. But from today's perspective, we're looking for a weekly close below the 100. Let's zoom out to the monthly and see what we got. We're far away from structure on the monthly. We haven't been below the monthly 200 in a long time, since 2003. You start to see stuff like that, and this plays into what is arguably like super cycle type narratives. And that's really what a dollar depreciative environment is. Folks need to remember that the bull market in 16, 17, the quote unquote, whatever the hell people want to define it as, and the bull market in 2020 and 2021 was in a dollar bullish environment, a secular dollar bullish environment. In hindsight, we didn't know where it was going once it punched the 100. This was a big punch of the 100 in 2021 because the last time we were below the 100, you know, that was a significant period of time, 2014 to 2021. Well, 2020, end of 2020. Took some years. Was that 6 years, give or take, to get back below the 100? So once we punch the weekly 200, then we're looking for the weekly 50. So 102, then 10, so a little bit below 102. So that's why I expect maybe some friction below the weekly 200. You'll find some support on the monthly 50, and then you fall down to 90. These would be very, very bullish environments if you get below, 100, 100 and a half, and you start to fall towards 98. Then it's weird, and then maybe it hovers there, and that's like 26, 27, and you bounce back to 101, or you find resistance at 104, the weekly 100, and then you finally fall below the monthly 100. And that this whole time you're producing lower highs and lower lows from a dollar perspective, and that's going to play out very differently for Bitcoin pricing. So if Bitcoin is priced what it is, and we've had these 70, 80, 90 massive percent retraces, maybe we don't have the same kinds of retraces. Maybe you have 20, 30% retraces. And this is part of the normalization process that folks have historically talked about. Once Bitcoin reaches critical mass, but it's not going to reach critical mass for necessarily the reasons that the popular talking points assert. It reaches critical mass because finally the dollar's in a depreciative secular trend. Hope that helps. So we haven't had a bull run so far. Absolutely not. Absolutely not. I define the bull market. Can we get the guppies to draw? Your bull market is generally speaking, in my opinion, the dollar below the weekly 200. This was the peak, the total absolute debauchery of 16, 17, and 20 and 21 when the dollar fell below the weekly 200. But literally, we just started talking about the weekly 100, as well as we see where the monthly 100 and the monthly 200 are. So things could become quite different than what we've historically experienced. I would love to see some guppies. Why don't the guppies draw when I'm on the call with you guys? Let's see if a refresh does it. They don't have guppies. Draw? Uh, I don't have any studies. I literally have an SMA up. I don't have anything else. Maybe if I turn off. Okay, at least we got some guppies. Apparently, they want me to pay. Red guppies. Red guppies on the weekly was the bull market for crypto. It's just what so that's why I state that. Back then, we know there was a bull market in what time period, and it turns out that time period literally is the red guppies on the weekly 200. So I'm like, all right, if that was the prime time back then, okay, so when's the next red guppies? We haven't had shit. We've had gray. Gray is the precursor to red, but gray is just heading there. It's not there. So that is correct. We have not seen a bull market yet. How to see the total market capitalization in the next figure. The market capitalization rankings are going to be incredibly brutal to see compared to what they are now. Yeah, it's just I align with what Dan Tapiero talks about. 10 trillion was his first big fund. I think he created a 50 trillion. He called it 50T instead of 10T for the next fund. So the point is markets expand and contract, but this is such a nascent market and so global, and a market of markets that is literally a step away from all global markets, as I was illustrating earlier, where any equities market around the world can be correlated with crypto. And it's the same thing that everyone used to do in the United States. Oh, equities are rallying, crypto. Yeah, great. Okay, equities of which country? So that same sentiment connection exists between all equity markets around the world and crypto. So the market capitalization should make sense to go higher low, higher high over time. I don't really care about market capitalization though. I care about currency supply. That means everything because that's you're here for that. You're here because you want to have dollars or whatever currency you're most interested in, but because that's what you buy things with is dollars. So you know, total net worth and market cap don't mean anything. They're these very strongly held values, and I understand why from a sentiment standpoint, but they really mean nothing. That's just something that I hold very true. Market cap and TVL, I don't give a crap. You want us really cut through the bullshit? How many stable coins are on an exchange? How many dollars are in an economic system? That's what matters. How everything changes and how the valuations will be extremely large compared to what they are. Yeah, but valuations don't mean anything. What matters is currency. Currency is a precursor to valuations, and also available currency supply is a component, or at least also a precursor to volume. And that's the most important inspection for myself and my chosen investments. I don't care about valuations. I care about velocity. That's a traditional financial inspection, but how much churn there is in those currency units, because that's what produces fees. Sonic is cool. It's doing exactly what everyone expected. It had a very exuberant run, and it's cooling down very quickly. From a network perspective, it's quite much more popular than any of the other fast networks. That's probably because of its historical momentum with Phantom. So it's probably the most interesting network, in my opinion, other than Solana. Maybe more interesting than Solana, particularly because it actually has fintech, whereas Solana doesn't really have anything, which is why we've seen massive capital outflows from Solana. Take a look at some data. If we go over to the only thing that has meaning, and we go over to Solana, so a big dip from 12.67 billion to 11 point $900 million outflow. I mean, seems to have stabilized and bumped up a little bit, but that's $900 million. That's a lot of dollars because that's not TVL. That's not, market cap. That's not an inflated value or valuation. That's literally total quantity of currency units. That's a much more meaningful inspection than those other attributes. Sonic. Yeah, I'm much more interested in Sonic than Solana. This is an ascent market, 200 mil total stable coins, up 63% week over week. Whereas if you go over to Solana, that came down. So unless this thing blows off, that's collapse of breath. And if you have collapse of breath where it stops going up as fast as it's been going up, and this was a hell of a run up, that's going to manifest itself in perceived weakness, a perceived reduction in capital activity, which basically means underperformance relative to other markets that are experiencing currency supply expansion. So that is all a precursor to capital flows from underperformance to outperformance. So much more interested in Sonic than Solana, and Sonic has its historic momentum from Phantom, which is putting it in front of a lot of other smaller name chains that have very fast block timing and very interesting properties. Um, but it's hard to get traction in the industry, and Sonic definitely had, um, you know, it's like a tire putting chains on it to get traction in the snow. So Sonic had a pair of chains that helped it get started. 200 mil, and that was pretty quick. Chris Haas, good morning. Always a pleasure. Fuku, it does feel different being prepared for this upcoming bull run with much bigger allocations than last time, and it's all productive. Survival is important. It's all about survival. So if you have the destination in mind and you're like, all right, I know where things are going to be. That's my entire philosophy. That's why I presented it to you so well over these years, especially of late, because it's been reduced to the fundamental components. All right, if the destination is significant increase in currency supply, which means significant increase in volume, which means significant increase in transaction fees and credit, that means there's going to be a significant increase in cash flow through the businesses that surface that cash flow to us. Okay, so I want to buy assets that give me cash flow associated with people taking on credit, facilitating transactions, so on and so forth. And what's the other condition? Y'all know the other condition. Oh, I'll buy that shit as cheap as possible. So in hindsight, what could I say? I could have bought shit cheaper. A lot of folks, maybe more recently, were able to buy things cheaper. The story doesn't change. The rules don't change. Maybe the conditions were a little bit different, but that doesn't affect my sentiment regarding the 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 rightness, the correctness of this methodology, could have done better. I don't care. You can always do better. You can always do better. There is no perfect, there is no best. All you have is that hindsight 2020, and you're like, shit, I could have done better. But that's not what's important. What's important is that you were right. Not that you could have done better. All right. And what's our goal? It's not to make as much money as possible, is to do well and to do right and to be reasonable. So that means the last 2, 3 years, 22, 23, 24, we're buying opportunities to build this portfolio to into 2030. We had 3 years to think about the structure of the system and how the structure of the system is going to change heading into the next decade. We did the right things over the last couple of years. Any opinions about RWA narrative? It's not. It's not really. It's not even a narrative. It's just collateral. It's a different type of collateral. What do you do with collateral? You borrow against it. That's all. That's it. That's the whole point. So collateral and currency share similar properties or similar use cases. So obviously, collateral you could borrow against, currency you cannot. But if you could borrow against collateral, you're borrowing currency, which means you could spend currency, and currency you could spend. So with collateral and currency, you could spend, which means you could buy, which means you can invest, so on and so forth. So basically, from my perspective, the more collateral in the system, whether it's native, endogenous, or exogenous, great, because that begets more currency and cross-border flows, on ramps, capital flowing into these markets, USDC, USDT, and whatnot, and other stable coins, endogenous stable coins. It's just all of that. That's the capital pool that triggers investments, that triggers price action, appreciation, that triggers volume and velocity of money in these markets. So the narrative of RWA that I look to is all right, great. More RWA, more currency in these markets. Keep it simple. Yup, dollar metrics say more than market cap, even on a per token basis. The amount of stables paired with a token makes it more attractive, and also more liquidity allows for more stability. It allows for less volatility. When you have low liquidity, you have significantly increased slippage. So the more, and that's exactly what Treasury always says: the deepest, most liquid markets in the world, or United States Treasury. Okay, so that makes sense. And then the market catches up and slams a shitload of volume at it and blows the liquidity utilization through the roof. And now it's not so deep and liquid, and you need more liquidity. So that's the way liquidity factors into the equation. Um, Surviving is being right. Yeah, that's it. Your the portfolio value means nothing. What matters is what it does. So what does that mean? And that's why productive assets are the core of the portfolio. If your portfolio, here's what I've said. Here's a decent example. If your portfolio is worth 10 grand to 100 grand, it was 100 grand top of 2021 and it crashed to 10 grand. Might not be the best example, but take it for what it's worth. 10 grand to 100 grand, and it produced 20 grand a year for 3 years. Boom, boom, boom. You had a 10 grand portfolio, was producing 20 grand. Market was hot. APRs were 100, 200%, what have you. However you want to define the parameters. Then the market was at 100 grand and everything started collapsing. Rates of return started collapsing, and you made 20 grand for the year. 10 grand portfolio, there's your range from 10 to 100. You made 20 grand, you made 20 grand, you made 20 grand for 3 years. Gives a shit about the value of the portfolio. That's the whole point. You care about the amount of revenue you made that you could actually spend and live your life with. So that's own assets. And that's exactly what business owners do. It's exactly what a pizza shop is, ladies and gentlemen. All you have to do is survive. And basically maybe The act of surviving means you were right. So survival is in itself a validation of rightness. Good morning, Cap. Hi, Harshal. How are you? Hope you're well. Morning, Cap. How are you? Yo, Maxie. Good morning. Wow, just joining. What is Captain discussing? Are we still in a bull run or are we done? Well, we've never been in a bull run since 2021. That's the most important takeaway. And maybe I'll end on this note and keep it to less than an hour stream today. We haven't been in a bull run since 2021. A bull run is defined as red guppies on the weekly. Here's your last bull run. There have been no red guppies in 2024 at all. But what is red guppies? That's exactly where we're heading. And that's the whole point. I just turned off the guppies to put on the MAs. So that's why we're excited that the dollar's down to 103 on this massive, absolutely monumental weekly candle, as other macro folks are pointing out as well. Um, and we're looking for a close below the 100 SMA on the weekly chart in 6 hours and 40 minutes. You close there, you ping pong between 102 and 104 for a month, and then it finally breaches 102 to the downside, smashing the 200 on the weekly, and then things start to get weird. If it smashes the 200 on the weekly, let's put the guppies back on, then you might start to see your red guppies. Note, why is this a leading indicator? Look, if red guppies are what I'm defining as the bull market, we have green guppies right now. We just punched through all green guppies. That's like other technical charts punching through the Ikimoku cloud and stuff like that. We just punched through the green guppies, ladies and gentlemen. That's the precursor to getting gray guppies. And the gray guppies are a precursor to getting red guppies. And the red guppies are weird. So we're not there. We're just starting. And that's the whole point. That's what this week was. I'm like, oh my God, look at this candle on the weekly. It's like, finally, finally. These are very weak in comparison. The two bullish periods in 2024, there's no red guppies. And look at these candles. Look at these relatively small candles compared to what just happened this week. This week can mean a lot. And it takes time for subsequent candles to tell us what this week means. But the size of this candle can potentially mean a lot depending on how the follow up candles provide confluence or not. Very exciting. Very exciting. Surviving is being right. Cash flow. Where am I? Oh, surviving is wild. Yep. Maxi Cap, I need this hopium. Right? It's not even hope. I don't have hopium. I have an understanding of where the destination is and the concept of surviving as being right. And right is judged based on your rules, and your rules manifest a portfolio, and your portfolio is a boat in a river. The river is going to take you wherever the hell it goes, but the river's not moving. I mean, obviously the flow of water in the river is moving, but the river's a river. It has very fixed boundaries, change over time, uh, geologically and whatnot. That's another story. But the river is basically constrained to its geological location. The river's going to a destination. You're on a boat in the river. Just sit your ass in the boat and let the river take you there. A lot of shit's gonna go down in the river. You hit some rapids. Maybe you get tossed out of your canoe and you flip it back over. Get back on the damn boat and let the river take you to your destination. Stop infatuating over stupid total net worth. It's such a stupid number. And that's exactly what Peter says. Cash flow portfolio makes the most sense. You never have to. You're on a boat. It's taking you to the destination. The total net worth goes all over the frickin' place. Who gives a crap? Buy as cheap as possible, and you get cash flow, which is a pizza shop. And if you have a pizza shop and it's doing well, you're like, shit, I want to franchise that. All right, which basically means you're going to get some more pizza shops, which is basically buying more businesses at the cheapest price possible. Pretty simple rules. Maxie, whoa, that is crazy. Yeah, some of these stories are pretty cool. Tokenized coin available on Base, tradable on Arrow. Yep. My friend, no, no, I appreciate you stating it. I have no interest. These corporations will do whatever the hell they want to do. Wild Missy Cap, too clever for me sometimes. I'm about to start teaching a yoga class. Enjoy, stay healthy. I should do more yoga and stretching and whatnot, but I'll definitely do my back exercise. It's very important to take care of yourself. Stoic market philosopher, thank you very much. I appreciate the kind words. Partial, this would be my first bull run. I entered crypto in 21. 21 was literally the end of the bull market. I will show that version with the guppies one more time. Nope, like that. So there you entered here, 2021, which was the end of the bull market because obviously 2020 was really the start of the bull market. And then everything has been downhill ever since. Inverse. This chart go up, everything gets screwed. This chart go down, crypto market get freaky. So yeah, we're not there yet. Does the concept of locking and revenue maxing apply to smaller portfolios? It depends on geographical location. It depends on expectations. Uh, for instance, a $10,000 portfolio getting 20 to 30%, returns. That's $2,000 to $3,000 a year. And what happens if that $10,000 portfolio turns into $100,000, producing 10 to 20% a year? Now it's making 10 to $20,000 a year. So a cash flow portfolio, even starting small, can become very meaningful depending on where the boat in the water in the river takes you. Depends on expectations. This is the hardest thing for younger persons. Younger persons are like, I just want to own something that goes up 10,000% to turn $1,000 into $100,000. Um, and that requires work. And I'm sorry, I might own pizza shops, but shit, I don't want to do work. I'm tired. I've been doing this a long time. I don't want to do work. All right, fine. I'm willing to put in the work, and I do work on a daily basis, but I also want something more. And that's why I told this story all these years. And I sure as hell hope this story is enjoyed, and I hope it helps. Friday, March 7th, 12:25 p.m. I appreciate all of you for joining me today. 212 people made it to the end of the stream, and you are all now a little bit more rational because of it. It is a Friday, so please relax, stay calm, cool, collected, stay rational, and do good things. Hit a sauna, go to the gym, and I will see you guys and gals next week on a Monday. Till then, peace.